Infrastructure has been one of the worst performing sectors ever since the Federal Reserve began raising interest rates at the beginning of 2022. This makes a lot of sense because most infrastructure companies are viewed as bond proxies. Companies like Brookfield Renewable Partners, Brookfield Infrastructure Partners, American Tower Corporation, they've all seen their stocks drop significantly over that period of time. And because they all have long-term dated cash flows. And so as bond proxies, when interest rates rise, the market also expects higher cash flow yields from those companies. That being said, billionaires like Larry Fink of BlackRock, Warren Buffett, Berkshire Hathaway, you have Schwarzman from Blackstone, Bruce Flatt from Brookfield, and even Enbridge have all been pouring billions of dollars into the infrastructure space recently. In this video, I'm going to discuss why. Hey everyone, my name is Samuel. I recently launched this channel after building the top-rated investment service on Seeking Alpha called High Yield Investor because I want to share my unique approach to dividend investing with a larger audience. You could really help me grow it by simply liking this video right now. I'd greatly appreciate it. Thank you very much. Okay, so why are all these leading investors pouring billions and billions of dollars into the infrastructure sector? Well, there are 5 big reasons why, and all of them are major macro trends that I do not see changing anytime soon. The first big one is simply demographics, and that's because leading economies of the world, from China to Europe to the United States, they're all trending older and older and older. And so as people retire, they need stable cash flow investments to be able to fund their retirements. And so infrastructure is a very appealing place to do that. So you have major asset managers like Blackstone and Brookfield and BlackRock. They're building these infrastructure funds in order to be able to provide this solution to retirees, this high yield, stable cash flow, but defensive in nature. Investments that should be able to keep up with inflation better over time than, say, traditional bonds, while still providing the cash flow needed to fund retirement living expenses. Another big reason why infrastructure is so attractive right now and attracting this investment from these leading investors and investment groups is because of the need for development in both developed nations as well as developing nations. Obviously, in developing nations, they need a lot of infrastructure just to be able to provide clean water, reliable electricity, build out some digital infrastructure so you can have cell service, internet access, some of the basic necessities of modern 21st century life, or even before 20th century life with the clean water and electricity that these countries need as they grow and develop. However, in the developed economies, this is also needed because a lot of the infrastructure in places like the United States is aging considerably. You have highways, bridges, ports, airports, etc., that are all quite old and in many cases increasingly obsolete for the increasing connected world in which we live. And so there's a lot of need to update or even completely replace these infrastructure assets in order to keep them modern and fully functional in the current economy. Another big reason that's somewhat related to that second point is digitization, where many say we're in the 4th industrial revolution right now with advent of things like artificial intelligence, data science, etc. Everything is so data driven, so connected with digitization. You have 5G, etc. And so there's an urgent need to update and roll out digital infrastructure, whether it be data centers or simply, again, updating existing infrastructure to be able to function with data collection, sensors, artificial intelligence applications, etc. And so there's a tremendous need for that investment as well. Fourth reason is deglobalization. Again, we have growing tensions in Europe between Russia and Europe and the United States, growing tensions in East Asia between China and some of the countries in that region like Japan, South Korea, Taiwan, as well as the United States and Europe and Australia and Canada. And so what that means is that supply chains are decoupling from reliance on China and Russia and some of their allies. And so increasingly energy needs to be produced in the West on a reliable basis. Increasingly semiconductors need to be produced in the West on a reliable basis. And many other industries with critical parts of the supply chain are being deglobalized. And what this means is that there's a dramatic demand for increased infrastructure, whether it be energy, semiconductor, or otherwise, to be able to meet these needs as the deglobalization, the decoupling takes place. And the final major macro trend here that's driving infrastructure demand is decarbonization. Perhaps this is the biggest one. The drive across the world to decarbonize the energy grid, to green the grid, whether it be building massive solar and wind farms to increase green energy production, or simply to improve the energy efficiencies of various forms of infrastructure, or build out charging station infrastructure for electric vehicles, etc. I know this one's a little bit of a politically debatable topic, even scientifically debatable topic, and I'm not taking a position on it here, simply to say that there is enormous demand for this, whether at the government level or at the corporate level, and I don't see that changing anytime soon. And so there's enormous demand for it. These investors see that, they're positioning themselves to profit from it, And I think investors, if they invest intelligently, can also profit from it. So what are some of my top picks to benefit from these trends and to invest just like all these leading investors are in infrastructure? Well, again, my outlook for the future, if you've seen some of my previous videos, you'll know this. I am fairly bearish on economic growth. I think we're headed for a stagflationary environment where all this build out of infrastructure and some other issues such as the deglobalization going on is going to be a bit inflationary. And I don't see AI really eating into that inflation for a while. And so I expect inflation to remain somewhat elevated, but economic growth to somewhat slow in the near term at least. And so I think companies that have very stable cash flows, that can withstand strong balance sheets, that can withstand in a slower economic environment, but also benefit from inflation are some of the best investments you can make. So, for example, Brookfield Infrastructure and Brookfield Renewable partners, both of them are great picks. Why? Because you get an attractive dividend yield that's over 5%. You get strong growth rates. They're expecting to generate between 8 and say 13% annualized growth because they have very strong growth pipelines with their acquisitions. They also have strong organic growth potential as they implement business models on their recent acquisitions. And also they have significant development projects underway, especially Brookfield Renewable does. And they also have inflation-linked contractual escalators that bring in the vast majority of their revenues. And so if inflation does remain higher for longer, you're going to see very strong organic growth from both Brookfield Infrastructure partners and Brookfield Renewable partners. They also have phenomenal management teams, Brookfield being the second largest alternative asset manager in the world, the largest infrastructure investor in the world. They have a lot of skill. They have operational skill. They have business connections around the world. They have arguably the best deal flow of any investor in the world in the infrastructure space. They know that space very well. They've been in it for decades. And so you're investing alongside truly world-class investors here that have very good, impressive track records. Both Brookfield Infrastructure partners and Brookfield Renewable partners have significantly outperformed the market over the long term, and they've been growing their distributions every year at a healthy clip. And so for all those reasons, I think both of those are great places to invest in infrastructure right now. Now, if you don't want to invest in individual stocks and you want just a broadly diversified fund, I think the ticker symbol XLU, it's a utilities ETF, is a pretty good pick because it has a very low expense ratio, has some leading blue chip utilities, should give you decent growth. Alternatively, if you want a little bit more risk and you're willing to pay a little bit higher in fees, but you get a higher yield, I think CEFs like UTF and UTG are pretty attractive as well. I've created a video on them in the past, and I'll link to that below as well so you can hear my thoughts on that. But I would say that those are the places I would go for infrastructure right now. I think the last option that, if you really want to emphasize growth, is perhaps Brookfield Asset Management, because they manage all these infrastructure funds at Brookfield, including BEP and BIP. They're the external manager, and so they earn a lot of fees, and they have significant growth potential. You get a bit lower of a dividend yield, it's about 4%, but you're going to get mid to high teens annualized growth in the earnings and potentially even the dividend from ticker symbol BAM or Brookfield Asset Management. So that's another great option to benefit from the infrastructure trend. Finally, I'd say if you want to invest in energy infrastructure, and BIP gives you some of that, but I'd say go for Enterprise Products Partners or Enbridge. I've also done videos on them in the past. I'll link to them below, but those are great conservative high yield opportunities to profit from the energy infrastructure boom as well. So if you found this video to be helpful, which I hope you did, please comment below and let me know about it. And also subscribe to my channel to make sure you catch all my future content where I discuss infrastructure investments like these and many more to come. Thank you very much. See you next time.